Aloha and welcome to Java. Thank you for joining me. It's December 13th, 2024. It is also Friday. So, wishing you all going into a wonderful weekend. I hope you have a really good trading day. I'd like to help set you up with this for some of what's going on in the markets this morning. We had some changes overnight. So, with this, let's start with a favorite risk indicator is the MMRI, and it's at 288.9 at the moment. Now, this has increased significantly. We're heading towards the extreme territory. Now, high risk right now, nothing massive at the moment. However, it is showing the advance in the direction. Now, with this, we've got the fear greed meter still below fear territory, solid in neutral at 48. This means retailers kind of washing out a little bit. Now, kind of looking at that Santa Claus rally that everyone expects in December. However, it's been a bit of chop, particularly with the Dow. Now, what is causing a lot of this, I really want to bring up the relative strength of the dollar. This is key in what has caused some of this risk and the disruption. Now, this is relative risk to other currencies, quite a bit that has been going on, but it's almost 107 at the moment. Now, when the dollar and the 10-year yield rise, it pressures stocks. Now, with this pullback yesterday, this is kind of an indicator of the money flow, if you will. So we had the Dow week, a lot of weakness we're seeing in the markets now. Oil coming up. This is set because there were some Russian airstrikes on Ukraine targeting their energy uh, facilities. So this has jumped oil a bit. We've got gold retracing a little bit. In my opinion, right now, it's just below 2,700, but it's kind of setting a new level to where it could advance from here. And I'll speak a little bit about that on the inflation looking forward to next week. We've got volatility index down a bit, but the futures are saying that there could be a change to a positive note either at open or shortly after market open. So pay attention to this. We've got silver still under pressure. Now it is acting more like an industrial metal as opposed to precious metal in this regard. And this is part of what I'm saying. The CAT, which is Caterpillar as a stock used for construction, oil has been down, copper is down, and silver acting as an industrial metal. Now, these are omens for the economy going forward, that there is lower demand for actual economy. Now, the further on the sentiment, we've got the jobless spiked to 242,000. Now, they're saying they're not a concern because it's still below 250,000, but they've been adjusting the numbers. So this could actually come out differently, in my opinion. And from the numbers I've seen, if you readjust them, the United States has been in a bit of a recession for the past 2 quarters. So with this, we've got inflation returning if the Federal Reserve cuts. Now, looking at the current inflation numbers, the CPI came in higher, the PPI came in higher. Their decision is next week. That could be a mover in the market. So regardless, we are set for higher inflation despite this temporary view of the dollar being higher. Now, looking at this, they're saying the dollar's been on a roll and just got another boost after a fall in the UK GDP. Now, they're not producing gross domestic product. They're down. Germany is down, and we'll look at this in a moment. With this, again, capital flows heading a bit more towards safety, which is why I think gold has more to go. Cryptocurrencies up. So with cryptocurrencies up, oil down, we've got some headwinds coming in. Okay. So today, prior to the market open, we expect import price index. This is mostly going to affect trade values and then also currencies. So relative strength of the currencies. This could affect markets by affecting that relative strength of the dollar. Hopefully it will suppress it a bit if they gain a little bit, because otherwise, if the dollar crushes other currencies too rapidly, is too much of a distortion. It'll get to a point where the market can't handle it. Now, we have Germany has been weak for some time. France as well. They're now at each other's throats because economically as well as politically, they're both under severe turmoil. Both of their GDPs taking a hit, and they cannot weather what is coming forward now. Bundesbank, which is of course Germany, slashing their growth forecast and now sounding alarms over a trade war. Now, it's no secret now that all of Western Europe as well as Asia have been put on alert, Canada and Mexico, that the new administration, the United States, is going to increase tariffs in a very nationalistic policy to protect America. So, with this going forward, it means that they will feel the pain more than they have been. So, this graph right here is talking about the European Union's countries' fiscal deficits. This is the prior year, but it's showing the relativities of them. So, if you'll watch on the one end, for the most part, most of them are underwater with their GDPs, as you'll see some of the larger countries down here. We've got France, Spain, Germany is increasing rapidly towards this end, and Italy facing some of the largest headwinds. They've had quite the year that they've had to battle back. I believe they've moved up a bit. However, they're all in severe deficit. Now, the United States is in a spending deficit as well, but they are the reserve currency and can weather this much more easily because they can basically print their way out of it. Okay, I've got a few other things that I would like to bring up in the real economy for the United States as far as the consumer. We've got built to rent homes popping up at faster pace as buyers are priced out. So nobody can afford to purchase homes in the United States. It's becoming a very slim sector. So now they're actually building homes for the purpose of renting out and trying to put these into smaller hands as opposed to institutions like BlackRock. However, that's still where they're ending up through their investment trusts and like instruments. So it's not quite working. We'll see what moves forward. So with this, the inflation, egg prices soaring, beef as well, and these may deliver an inflation shock to grocery shoppers. Now, these are expensive for the grocers to purchase, but they pass this on, and it's going to increase from here because the Federal Reserve, with their cutting the rates, they're going to find themselves into a hard corner very quickly here. So with this also dollar stars, which are the lower end consumer, if you will, normally they're flashing a warning signal about lower income consumers. And a couple of the metrics that they are tracking is the spending per month, is that there is much less spending at the end of the month as people run out of funds. They can no longer get the goods that they need. Also, the items that they're spending, they're waiting until they are either larger supply, less of a cost, or if they are on sale. So all of these are negative signs. Now, I wanted to bring up with Russia. They're explaining their largest retaliatory strikes on Ukraine. And as I said before, they hit a number of Kiev's key energy facilities. So this is what has given a temporary boost to oil in the energy sector. Otherwise, these coupled with the others are signaling a slowdown in demand and in the economy. So once this spiral hits, it's very, very difficult to slow or reverse. In fact, hasn't been accomplished before. So moving to cryptocurrencies, we did have a bit of a crypto conference last night, which covered some very good basic, some larger questions. We've got BlackRock now coming out saying that 1% to 2% is a quote unquote reasonable Bitcoin portfolio allocation. Now, this is in addition to what they call the general 60-40 bond stock split, and then possibly owning 10% in gold. Now they're saying 1% to 2% in Bitcoin. So rebalancing going on here, cryptocurrencies to continue. With this, we've also got Tesla pushing real-time payments adoption. Now, this is more the background for CBDC. Real-time payments are with CBDCs. So just to make you aware of this. We've got a Texas lawmaker proposing a bill to establish a strategic Bitcoin reserve for the state. Now, I support this. I also support it for the United States to have a Bitcoin reserve. However, I do not support selling the gold, if indeed it does exist, in order to purchase Bitcoin. Why trade an asset for another? Instead, they should use the paper trash that they print and use that to purchase real assets, Bitcoin and gold. They are now also in a deadlock over whether they can afford to go forward with government spending. They're again looking at the government shutdown because they cannot afford to run the government as a business. We know they're going to accept this. They're sending billions to Ukraine and other places. It's just absolutely ridiculous. I don't think that anyone with half a mind actually believes that this is an actual argument. So one other thing I wanted to mention, this is Solana, especially if you're into cryptocurrency and understand the projects or how they work, or when you mint coins for other projects. Many of them are built on the Ethereum network, but now we've got Solana overthrowing Ethereum's top ecosystem for new devs. So now for developer activity, this is the new one that is coming forward and could eclipse Ethereum. Now, right now, Ethereum still is the top globally for all of these productions. But just to make you aware, there could be a swap in this as well. So with this, I hope you all have a wonderful weekend. Thank you kindly for joining me again on Friday the 13th. And until I see you again, my friends, stay free.